Profile Trading Development Pathway, a systematic approach to help you build toward trading skill and consistency using the market profile graphic and volume profile as a tool to help you arrange auction information and make better decisions. And we believe if you make better decisions, you'll ultimately take more profits. If this is your first module that you're experiencing, make sure that you review the orientation materials and videos that were sent to you via email or on the Trade with Profile website so that you have an understanding of our methodology, how this module fits within the scope of all the other modules so that you can continue to build your understanding while getting some specific guidance from this module, but see how this part fits within the larger whole and builds towards that skill and consistency. In this module, we're talking about using value migration to predict future action. Now, like all modules, we start with a trading challenge because, at the end of the day, what we're talking about has to meet the challenges that traders face. And here's one: knowing that I can't influence price direction, how can I be more predictive of future price action as a trader? This is a challenge. It's that I want, because we're making decisions on the hard right edge of the chart, I want to be able to have a predictive capability of where price will go. But how can I be better at that? I can't make the price go someplace, but how can I get a sense of what's happening in front of me and that leading me to believe what will happen next and have some edge around that? Well, because the market is an auction, there's a principle that helps, and that is that a directional auction will continue so long as value follows price. Otherwise, price will return to value. Okay, we talk about this in other modules in forms of balance and relationship of price to value. We're going to elaborate more in this module. But the risk is that without a clear ability to objectively isolate potential future price scenarios, you're trading on hope. And then you begin to fall victim to things like confirmation bias, cognitive dissonance, and other fallacies that impact trading performance. So anytime we come to market, we try to come as objectively as possible, but we're trying to read the data of what's happening in the auction so that we can make good decisions. And we do that using scenarios. And we're using the data to help us inform better scenarios. So if I have a good read on that, I can have better outcomes than others. And that's the ultimate outcome of this module, is that you're going to be able to identify something we call inventory imbalances, and that you're going to predict potential value migration and shifts in that value, giving you an edge in determining future price action by eliminating less probable outcomes. So by able to see imbalances, being able to predict where value will shift, you're going to have an edge and you're going to be able to eliminate things that are less likely to happen. Now, if you recall, when we strip all auction behavior down, as simply as we can get it, there's really two ways that we describe it: either distributing or developing. And in auction theory, we talk about that as an imbalanced or balanced. Or if you may have terms that you're familiar with that are like trending or directional, or all forms of distribution. And development in the auction is either consolidating or sideways trade, right? So that's all auction activity can be described in that way. Now, we use questions a lot of the auction. Anytime you're in front of a market, you want to ask questions of the auction to help give you feedback rather than to assert what you believe. Just ask questions of it. And one question that we ask is the auction in front of me complete or developing? Or is the auction in front of me still facilitating directional trade or distributing? Okay, so if I was going to be able to answer this question, I have to know the difference between a complete versus an incomplete auction, which we talk about this in other modules as well. But as a reminder, a complete auction is an auction that has reached what we call equilibrium, where inventory is in a balanced range defined by excess. Okay, it's a balanced range defined by excess. Now, we can use profile imbalances to predict what happens next in terms of that balanced auction, that complete auction that has excess. And we do that using things called bells, Bs, and Ps. So if you've never seen auction theory vernacular, this will be completely new to you. Some of you have been exposed to these forms of jargon, and hopefully you've either seen a good view of this, or we're going to help refine that and give you something that's more actionable. But let's talk about bells. Okay, so this is the market that's at rest or completed, and it takes the form of a bell as it has reached equilibrium. And this can be either intraday or multi-session, But it's behaviorally what's happening is that you have rotations taking place around accepted prices. There's no one time framing. One time framing meaning that each subsequent 30-minute period we're getting either a higher high and a higher low, or a lower low and a lower high. When you're in this behavior, there's no directional conviction. We're sideways, we're developing. Excess defines the edges, and this is an area when we say that the day time frame player is in control. So this is the smaller money that doesn't really want to move the market, doesn't have the power to move the market, so we're going to stay in a fairly tighted range. And we need new information to break from equilibrium. It's going to look like this, okay? And if you flip that on its side, oh, it looks a lot like a bell curve that we would see in a normal distribution of statistics. Okay? Here's another example. When we have excess or unfair highs and unfair lows with the most traded price in the middle, that's a completed auction in an intraday basis. Now, we could look at multi-session like this using a market profile graphic or a volume profile graphic and get a sense for what's happening in the larger view of the auction to see that we have a balanced range with excess above and excess below. Now, the next is Bs. So Bs is a profile that is imbalanced to the downside, with participants doing business at an extreme. Now, contextually, an auction is moving lower in the day time frame and is incomplete to the downside because there's no excess and rejection of directional prices. So we're going to expect more price discovery lower to balance the profile and reach equilibrium. So if I look at a profile like this, notice how I have no completed, it looks like a B. It's a B-shaped profile. So all of the inventory is down here at the bottom, and I've got excess to the upside, but I don't have any excess to shut it off to the downside. So in this case, I would expect lower prices. Now, given that this is imbalanced, I'm looking for it to auction lower to balance itself. There is a caveat to that. And the caveat is that if the most recent auction, so if I've had a multi-session auction where let's say that I have been trading higher, it's like, here's a day, here's a day, here's a day, and then on this day I move lower. So the prevailing trend has been higher. So if the prevailing move is higher, this is actually not something that I expect lower. This is actually a liquidation break where the auction comes down to find participants and then will actually rotate back higher. So when you look at Bs on like a daily profile, yes, the expectation is that it's imbalanced to the downside. Now, if I find one like this, and again, the prevailing move has been higher, this is typically just a one-time session, and it's actually an opportunity to buy at better prices. Okay, so that's a B-shaped profile, but you get the idea of an imbalance or skew in the profile. And then there's P-shaped. Okay, so P-shaped is where the imbalance to the upside. And contextually, the auction is moving higher in the day time frame and is incomplete to the upside. There's no excess and or rejection of higher prices, so we expect higher prices to repair the imbalance. See, this looks like this. So same deal. I've got excess to the downside. I've got good buying excess. I'm incomplete. I'm looking for higher prices to get me to equilibrium, and where this is in the middle of the profile, not at an extreme. Now, just like with the Bs, there's a caveat to this one as well, and that is that if the prevailing move is lower, so that means if recent auction activity has been trading lower, and then I get a day like this is often short covering. So this is, relief off of the downward auction that actually allows me an opportunity to get short at better prices. So just beware when you're looking at those imbalances. We're always, even though we're often trading in the day time frame, we're looking at the larger picture to see what's going on and to give us some guidance as well. Now, so that's imbalance in the profile. Let's also talk about value migration. So this is where, for auction participants to continue accepting the direction of the auction, the perception of value has to shift. And we talk about value as the most traded price. So that's going to have to change where that most traded price is as an acceptance. We talk about acceptance in module 3 of the price discovery. An inventory that queues up at an extreme is often predictive of future and further directional excursion to repair the imbalance and shifts in value are often predictive of future price discovery. So imbalances in the developing profile suggest value following price and exhaustion not met. And this is related to one of the questions that you're asking about the auction as well, is value following price or is price following value? That can give you a sense of where the auction is going to go next. Now, to wrap our arms around this more fully, let's look at some live examples, kind of walking through a couple sessions to take some of these concepts and make them a little more concrete. So let's start with a profile imbalance example. Okay, so here we are, we're looking at the NASDAQ, and we are opening. Now let's talk about where we are overall in the context of this auction. So the auction has had some, several sessions of overlap, had what looks to be a shortened session above, most likely given the date, Martin Luther King Day, and we are now set to open below the most traded price. We're below value of the most recent auction. And here's our overnight range. Okay, so we're gonna kind of step through this. Now, typically when you're like this, and with the gaps, we have gap rules, so we'd be waiting to see what the IB does before we go. Okay, so through A period, the auction has come back to that most traded price. And notice that already in A period, we have a directional open test drive higher, filling the gap. It's cleaning this naked point of control. But notice already that we've got a little bit of a skew in the profile to the upside. Okay, so if we go through B period, we've repaired a little bit of that. So see, we got higher prices, but see how the profile has actually repaired, and this is the point of control is now more in the middle. Okay, we're going to go to B period. Now, after that B period finished, we're into C period. Notice how at the top of the profile, it's really chunky here. So there's lots of volume up here. Again, not much volume down here. So that is more bullish imbalance in the profile. So either the auction's got to trade down here and repair the imbalance this way, or we're going to go this way to repair the imbalance. So I mean by trading lower, we have to trade lower and we have to build out the profile to balance this. Otherwise, we're going higher. Okay, get through C period, even more inventory at the top. D period. Now, notice here in D period and E period, we actually trade lower, but what we're unable to do is we're unable to change the picture. So they didn't do a lot of volume down here. So, I mean, if they spend some more time, they could put some more volume down, that would be one thing, which they do a little bit, still have a slope as they come back to test the open. And there is still a point of control in the middle, but I still don't have really good excess to the upside. Auction comes back towards the middle, trading back up now, again, through the IB. We still don't have IB extensions. That IB stat is still active. Okay, now we've taken out the IB high and we're starting to try to repair this imbalance, but notice we have all of this buying, none down here, so that would actually predict that we'd kind of get in this ballpark. Okay, we spend a little more time queuing up. We migrate the point of control. So this is the point of control that has now migrated higher, furthering the imbalance, and boom, boom, boom. All right, see how the profile now changes, where I've got good taper in the profile to the downside and taper of the upside with the value in the middle of the profile. And now the auction comes to close and has a completeness to it now that that imbalance has been repaired. So when you're sitting in front of an auction and you're looking at the, when you're looking at the long term, I know the classic lure is to look at a much smaller time frame. Here I'm looking at 30-minute basis. I'm not even looking at a trigger time frame, but I'm staying nested in what's the broader context of where the auction is and where's their balance and imbalance in the profile to predict where the future auction is going to go. And even when the auction moved lower, it was not building out inventory down here. So that would say that if it tried to go lower, it was likely going to snap back because I was not being able to build inventory, and there was no imbalance down here. There was imbalance here. So, if you're trying to short up here and there was an imbalance, that's a recipe to get run over because there's inventory queued up. Okay, let's look at another one, talk about following volume point control shifts. So here, contextually, here's gold. Gold has just recently made a move from a large balance area. It's spending a couple days lower with a gap. Okay, so a couple days of balance lower. We're looking at this day, for example, we're just through the establishment of the initial balance. Overnight, okay, most traded price is down here. So for the full ETH session, the point of control is much lower. So let's zoom in on this and take a look more clearly. So again, point of control for the session is right here. Point of control for the RTH is up here, but notice how elongated this profile is. So this auction has already moved high. The question is, like, where is it likely to go next? And what would it have to do that, to continue to go higher? So to continue to go higher, this thing is going to have to build out inventory at these higher prices. Otherwise, it's going to run the risk of moving back lower, back toward these longer composite levels, back toward these most traded prices, back toward the point of control for the session. Okay, and looking at this on just, looking at the IB here, just on a 5-minute basis, we can see early in the session that they did migrate value higher throughout the session. And we've got a little bit of a bullish imbalance, although it's not very much volume. We've got a bullish imbalance in the profile. So this says that the auction is not yet done, and we have a directional open. So that would say the auction is not done to the upside unless we start rotating back through here and build out the profile to repair the imbalance. Okay, so now let's go look at a 30-minute period. So in C period, we did get slightly higher prices, but now we're trading back lower, and we're also building out more volume. So we are accepting prices here. Still have a bullish imbalance in the profile, so this is definitely an opportunity. However, note what's happened most recently in the auction again. The auction was moving lower. This is a rapid move higher. This is very much like a P shape. So if we can't move higher, this could have been an opportunity to rotate back in this direction. And if that's the case, then we're going to see value migrate in this direction. If we see value continue to hold up here, and we see the order flow support it, we would look for it as a move up this way. So more time is helpful. Okay, another 30 minutes, and we have now traded back toward the open. So we're eating in a little bit of that buying excess. Still have an imbalance to the upside, but note that even on this 30-minute period, that there is some imbalance in this profile, especially where the the big sellers are. It's imbalanced down here. So see how on this initial 30-minute buying, there was imbalance or excess at the bottom. There's a bearish imbalance here that would suggest actually we're going to get some lower prices still. Okay, and we in fact do, that go all the way back to an open. It was a directional open back towards the VWAP and 50% trade in the auction. So this is telling me that this actually was a short covering rally, and the auction is looking to move lower. So then the question is, to where? Okay, because we have an area of volume here, an area of volume here, an area of volume here. We have some areas of volume in the RTH session, but at the end of the day, this auction is, if it's going to keep moving lower, it's going to have to pull the VPOC lower. And a good candidate would be right here around this 1883. That'd be the nearest candidate in the intraday session. Okay, so we're going to spend another 30 minutes, and you can see we're actually building out. The auction actually kicked back in the direction of value, but we're building out volume right around here. So that's most likely going to be a place that we're going to shift value to lower, which means that there's likely going to be time hanging around here. It also means that we're accepting prices lower in the imbalance, and that would suggest that we're yet incomplete to the downside. And we do get IB low extension. The auction goes neutral because we have IB high extension. Now we have IB low extension and a little bit of excess here, but notice that the value hasn't moved lower. So this is the type of stuff that if you were short, you would say, okay, I am now kind of in defense mood. Now we could go all the way back down here, but with value way up here, I would need the auction to move all the way down to this area and spend a lot of time to pull the value lower, or it's most likely I'm going to come back to this area to pull the value lower. Okay, and we're just looking at our IB extension as well. Another 30 minutes, and now we've come back to that exact area and we've pulled the VPOC lower. So see how that value shifted to follow, that's just, you know, further confirming, but we saw that area of volume developing before the shift happened. And you can even take advantage of that, where if you're in a prior period and you know an area where the value might, you can actually take a counter trade or a long trade back towards that to pull value down. Okay, and the auctions continue to balance and balance and closes the day. Now, it's a pretty typical session. Overall, what's happened is we've spent more time accepting these lower prices, which says, hey, if I can get below this volume point of control, the auction should head this way. But I need to build out volume down here. The highest volume is still up here. So if something happens and I get above this day's high, I can be moving back towards that area of value. This is the difficulty of looking at this on all these time frames, but really just looking at it intraday first to get a sense of how that value can shift and either confirm where the auction is going or be more predictive of where it's going to go via an imbalance. Okay, now how do we apply this when we think about our anchor trades, our IB go with, or our extension fade? You know, again, the question, when we see IB extension, the question is always, should I go with it or should I fade it? Well, with the IB go with, if I'm in a directional IB go with trade away from the developing point of control, so I'm long above value or I'm short below value, I'm going to be more aggressive when there is an imbalance in the profile in my favor. However, if there's not an imbalance in my favor, I'm going to favor pullbacks toward the developing point of control to establish position. What do I mean by this? Well, let's say that I want to take an IB go with high and the profile is imbalanced right at IB high. That's when I'm going to be more aggressive in, because I'm looking for the auction to repair the imbalance. If, however, at IB high and I've got a more balanced profile already, I'm going to look for a pullback back to the point of control to get better position, because I want to be where there's an imbalance in my favor. I don't want to be in an area where there's imbalance has been repaired. It's more potential for the auction to pull back towards the volume point of control. If my IB go with entry is established favorably relative to value, I want to make sure that there is a developing imbalance, or make sure that there's not a developing imbalance in my area of interest, lest it's a liquidation break or short covering rally. What does that mean? Well, so if I have IB high extension and I have a point of control here, and throughout the day I rotate back lower and I take that counter trade, which that's a long, what I don't want is I don't want a situation where I've got IB high extension and then I rotate back towards the low and I've got a profile that's imbalanced to the downside, unless it's a liquidation break or short covering rally. Because if it's not one of those two, then the auction could push this way and stop me out very quickly. Now, for an extension fade, the best fade trades happen when the bullish or bearish imbalances in the profile are repaired. So we don't have them, and the auction has excess in the profile. If there is an imbalance in the profile, wait for excess to confirm directional shutoff before taking the fade trade. Okay, takeaway from this module is that if you can read profile imbalances and predict value migrations, you have a better expectation for what may happen next, giving you an edge. Okay, homework. to help you refine these, and I realize it takes time to kind of see these aspects of the auction. So the best way to do it is just to select a trading product, and at first try to identify a bullish or bearish imbalance in the time frame of your choice, and then identify a potential area for value to shift to if accepted. And then on top of that, add additional, hey, if value was to shift, what are scenarios that would provoke a value migration? Where might value shift to? And share those in the Pathway channel or in a direct message to the team or via email to get some feedback. Make sure that you're on the right track. That is module 7, using value migration to predict future price action.